Hello, Oracles. What a wild week we have had so far this week, and we kind of anticipated it. We had the biggest earnings coming out pretty much of the season are coming out this week. We had Microsoft, Amazon, Apple, Meta, a lot of Magnificent Seven coming out this week. And I apologize. I've been feeling under the weather. I don't think I'm sick, but I think it's a seasonal change thing. So it's definitely taking its toll on me. That's why I wasn't live last night. So I apologize for not being on last night. I will be planning on being on Thursdays going forward here. But yeah, it's been a rough, tiring week. I've just been exhausted all week long. But let me know how you guys are doing. Definitely excited about what we are seeing in the market. I made a lot of purchases today, made some moves in my portfolio. I ended up selling out so I own Oracle stock, or owned it. And I put a stop in there and was just kind of like, you know what, I'll wait and see what happens. Their earnings are coming up in a couple of weeks, but I mean, I was up like 50% on the stock, and their balance sheet is too questionable for me, especially with a potential recession going on in the future. And for me, I've got so many other tech plays out there. I didn't need another one. So if I'm trying to consolidate, they were on the chopping block. I ended up getting stopped out. So I got stopped out of that one. And then Cat, I decided this week after their earnings came out, they're at all-time highs. I'm up, I think, 14% on Cat right now. And again, in an effort to consolidate with what I think might be a recession, and I'm not going to base all of my decisions on what I think might happen with a recession, because if we don't get one, then I'm going to lose out. But just with Cat, with them kind of giving us a forecast that is lower than expected, facing some struggles, I think they do have a chance to turn it around with the interest rates coming down. But if they're sitting on a lot of inventory, it's almost like legacy automotive makers. They're sitting on a lot of inventory right now. Nobody's purchasing anything right now because a lot of people are in kind of the same mentality I am of, I don't know what's going to happen next year. I don't know if we're going to hit a recession. We still see major companies doing significant layoffs. Visa blowing out earnings, still laying off 1,400 people. So with all of that uncertainty going on out there right now, it's kind of like even big businesses are like, do we make a new large equipment purchase or not? And that's kind of where we're at. And that's why Cat is in the position they're in, which is why I decided to put a stop on them. I didn't just sell them outright. I figure, hey, if they're going to run from here, I'll let them run. But I put a 3% stop on my Cat play, and I'll let it ride from there. I also put a stop in on some Prologis. So Prologis is one of the REITs that I have. Love Prologis, love it looking long term. But for me, because their yield is lower and they kind of trade more like a dividend growth stock than a REIT, I decided to cut the position I have in them down to be more with my dividend growth plays. So that's what I ended up doing today, but I did it in increments. So I sold off 3 shares today. I only own 12, but I sold off 3. And then for 2 others, I put a stop loss in for 2%, and another 2 I put for a stop loss for 4%. Because the stock price does move a lot more than normal REITs, if it does end up rebounding, I want to be able to capture some of those gains. And again, it's not a play I'm looking to get out of. I'm just looking to minimize my position in them, just cut that down a little bit, and it'll in turn free up some cash if the market pulls back. We saw a bit of a pullback today in some areas. The market was green, but I saw my BDCs taking a hit because we got the jobs report this morning, and the jobs report was not looking so good. So, of course, BDCs are taking a hit, REITs are taking a hit. Some areas of my portfolio were taking quite a beating today while the market was green. So that gave me an opportunity to buy more of these positions up at lower costs. So I was happy about that. And of course, anytime I can buy income at a discount, I'm very happy with it. And then, of course, we've got election season. So we've got the election going on next week. Early voting has started in many places, and in some places, early voting is ending already. It goes state by state, I guess. However that's going to work, I don't know. But for me, that's kind of where I'm at. And just election season, 1 more week, and it's my birthday. And then I'm not too concerned about elections anymore after that. And of course, we've got Stonks market here saying, based on the betting markets, we should have a market run if Trump wins and a market pullback if Kamala wins. I'm holding a big bag of certain small cap stocks, so I'm hopeful small caps rally hard. And for me, I mean, I'm not one to kind of play those games. It's almost like playing earnings there. And of course, if you're sitting on something that you're upside down on, you kind of hope that rallies so that you can make some. So I totally understand that position. For me, I just take what the market gives me. And honestly, that's it. So if the market's going to give me an opportunity to buy like it did today, I'll buy it. If the market's going to keep on running and I don't have an opportunity to buy anything, I'll add to cash and I'll just build up my cash position so that when we do have an opportunity, I'll be able to take advantage of it from there. And so where I'm at right now, and I'll bring it up for you guys to show you. Um, let me see here. Share. No, 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 no. There we go. Let's do it this way. All right, I'll bring up all the different moves I made today. Oh, why is this so sluggish? All right. All right, so moves I made today. So again, I moved my PLD down here. So Prologis is now down in this section, and I still have some to sell off in this. And I just added a lot to a lot of plays today. Like I added to QQQI, SPYI, I added to JEPQ, added to ARCC, HTGC. Basically, all of these plays up here, I added to today, and in significant amounts. So I did take the next step. So these are now at step 10, whereas these here are still at step 9. So once this gets topped off, I'll move that to step 9 and so forth. And my goal is to get to the end of step 10 by the end of the year. That'll put me to level 2 for next year. And that I think will be in a comfortable place for me. Because again, if we are getting into a more difficult economic time, then I can be like, all right, here's my new foundation at level 2, and I'll start from there. And I can just kind of build and let the market give me what it'll give me at that point. And I'll be comfortable with my 10% cash, looking to build even more up to 10 and a quarter or 10.5%, and just kind of grow it from there. And just really step 2 or level 2 is kind of more like just a monitor type step growth, but monitoring, see what's going on. And that's kind of what my focus is going to be when it comes to step level 2 for next year. And let me see. Yep, my Oracle sold out, and I do need to update this. So members and patrons, I do need to update this. Just a few things that I can't do while I'm at my job. Just to update, there's a couple of categories that ended up getting shifted, like total return shifted. I need to add my my total total gains on these realized gains. I need to update, and I am adding another column to this as the quarter of the increase. So I put this in here because I wanted to put down, when I'm looking at it of, hey, well, what historically, like for instance, ExxonMobil, what quarter is it that they historically go up on their dividends? And I want to add that in here. And I know some of these pay out monthly, so that's not going to be as important for some of these up here. But when it comes to all of the main stocks down here, it's something I want to know. I want to know what the common quarter is that they typically go up. This way I can track it and show you guys what we're looking at for increases when it comes to all those dividends. And then the jobs report came out today showing 12,000 jobs. Weak, very, very weak jobs, revising down from last month, which we kind of anticipated, coming down from the 768,000 to 650,000. So not a huge revision down, but still a revision down. And they've been revising down month after month after month. So I'm just anticipating we're going to get a further downward revision next month. And again, this is what I've been paying attention to, is what is the jobs report telling us? We know that inflation is basically under control. Awesome. But when we're looking at the jobs report, if we are going to be getting an unemployment spike and we keep on going up in unemployment and we keep on losing jobs, and we've got the layoffs going on, we've got Amazon who's just telling people that they need to go back to work 5 days a week in the office. They're not laying people off or firing anybody. They're basically letting it happen naturally. And people who just don't want to do that won't come back to work. And they're just not going to refill those positions. And they're kind of doing it that way. So that's kind of their first step of layoffs is, well, let's kind of put in place some, new stipulations and see how people feel about it. And if we still need to cut from there, we'll cut from there. But that's the first step. And so that's kind of what we're playing with right now, is the first step of just that. And we're seeing what Amazon is doing. And again, Visa, companies that have been doing great with earnings are still laying people off. That's the bigger concern. And then when you get down to a point where if they're laying people off and they're doing really well, how about companies that aren't doing well? What are they doing? They're laying people off. They're struggling. They're trying to do whatever they can to cut all of those costs at the bottom line to survive. Because guess what? If they can't survive and then we end up seeing a recession actually happen, they're done. And some of these larger companies may end up buying them up. And or they just go to the wayside entirely. Either way, that's another chunk of unemployment that comes out. Companies obviously going under are going to cause massive unemployment. And then that kind of causes that domino effect that goes forward even from there. So it's just that thing that we're really paying attention to is, what is going on with the jobs market. And right now it's not looking good. So just still paying attention to that as we go forward. And again, we've got the election next week. And then 2 days after the election, we've got the Fed's decision when it comes to the interest rate cuts. Are they going to be cutting more? This jobs report may indicate, yeah, they're going to be cutting more because obviously things are really tight right now where companies are having to lay people off and inflation is under control enough to where the Fed can say, all right, well, we can come down on the interest rates. It's not going to cause inflation to turn around and spike back up again. So should be safe with that. Plus, if unemployment is going up, people are losing their jobs. It's not like there's going to be a lot more demand for products. Thereby, you're not going to get that inflation from people buying more because people can't buy more. So it gives me the indication that we're going to see a 25 basis point cut coming next week. I don't think they'll do a 50. If they do another 50, that's going to cause the market to panic. Now, granted, it's going to be coming after the election. And if you want to play political games and say that, despite the fact that the Fed has said that they don't, take politics into any of their decisions, Jerome Powell does lean more left. If Trump ends up winning, is he going to cut 50 basis points? I don't think that's a game that's going to get played. I truly don't. But some people may end up thinking that if he goes 50 basis points. And obviously, it's not just Jerome Powell, it's the entire committee coming up with this decision. But that's just a thought that is going on in some people's minds right now. But either way, looking at what's going on, we've got the election, and then we've got the FOMC meeting. So next week could be even more volatile than this week when it came to the market. And this week we saw a couple of days red, a couple of days green. So definitely the volatility is picking back up again, and we're swinging all over the place. Yeah. Yeah, today's report was hot garbage. More layoffs seem imminent. Tangent, but I wonder if Trump will actually fire Jay Powell if he wins. He said in the past, yeah, and I know Trump has said that. And again, I don't do the politics thing, but my concern, not even from a political standpoint, but Jerome Powell's basically been our guy to go to for the last 4 years. So whether you agree with him, disagree with him, trust him, whatever it is, he's been the guy. So are we at a point right now where we would be in a good place if we put somebody new in place? Or is it better to just leave him there until we either A, get to a recession, or B, get to a point where we can confirm we are through this and don't need to worry about it? So that's kind of where I'm at right now. So I don't know if pulling him out and replacing him right now is the best idea. But hey, obviously there's a lot more to be involved. I don't know. I'm not there. So maybe Trump has a better person. Who knows? Maybe we do replace him and we do get some better things going on. We just have to wait and see what happens next week. And obviously, whatever ends up happening, if Trump does end up winning the election, he can't do anything until next February, March, whatever it is. He can't do anything until next year anyway, because that's when he actually takes over office. So it's not like we're going to see, if Trump wins, the next day he fires Jay Powell. That's not how it's going to work. So chances are, actually, that's a good thought, because timing wise, I'm thinking recession hits probably late Q1, early Q2 of next year. That's around the time that if it was Trump that was taking over, that's around the time he would take over. If he does end up flipping Powell out, that could be the time that kind of causes the market to really panic. And that's one of those extra dominoes that pushes it to fall. So I'd be interested to see how that all plays out. Again, I'm not one to predict anything like this. These are just all the different scenarios that play into my head. And I prepare myself to take advantage of any of them that actually do play out. So if nothing plays out and we go sunshine and rainbows from here, I'm invested in the market and I will let it ride. If we see dark and gloomy skies coming, then I am ready with a bunch of cash on the sidelines to be able to take advantage of that. Oh man, let me see what else is going on. I'm not going to be on for too long tonight because my throat is still a bit off and talking a lot definitely wears on it. But earnings this week, again, we did see some good earnings, and we saw, at least from like the big tech companies, for the most part, Apple was a little bit weaker on their guidance, but honestly, not really all that much. They gave us actually a stronger margin guidance and a weaker revenue guidance, but it really on the slim difference really didn't make that much of a difference. So honestly, most of the reports were good that were coming out. Now, again, I had mentioned earlier, Cat, they're not sure what's going on. They kind of lowered their guidance for the future. SoFi, awesome. Loved their report. And actually, so they just announced another one that I got today. Again, I love SoFi, the platform. Setting up automatic investment days. So, like, let's say I'm doing $25 a week. So I put $50 a week into my vault for saving for my portfolio. So if I put that directly into my investment account, I would be getting 1% back in points for all of that I put in there. But for me, the reason I don't do that is because I actually get 4.2% back by having that money get put into a vault. So it makes no sense for me to not have it in a vault and put it into my investment account where I make nothing. And I've asked SoFi about it. They haven't responded to me. I've asked if they could do, and I know other platforms do that, is uninvested cash is getting basically that 4.2%. I would love if SoFi could do that. There's got to be a reason they don't. I don't know what it is, but either way, it's an easy, transition for me to be able to just take that money and say, "Oh, I've got it in my vault. I'm just going to transfer it right over to my saving, over to my investing account." Not a huge deal. I'm not too concerned about that. Oh, Dad was late. It's okay, Dad. I forgive you. It's okay to be late. But yeah. So otherwise, I mean, earnings were mostly good this week. But we are seeing some indications, as we had seen back in Q2, of AI just not being as strong. And it's not to say that it's not strong, it's just that there's a lot of excitement around AI, and I think it's rightfully so, very much like the internet and the dot-com bubble that we had seen. But there's a lot of AI spending that's going on, but no return on that investment yet. It's coming. Again, very much like the internet when that first came out. There was a lot of investing going on up front, and then it took some time for the real winners to emerge and come out and actually see who is getting any returns on that investment. And it took almost 10 years. That's why we had basically the lost decade from 2001 until 2010. Of course, we also had the housing crisis in there. But because we saw all of that, that's kind of what caused a lot of that to happen. And then winners emerged. That could be something similar that's going on now, because we are hearing about some companies out there that really have nothing to support and back their AI, but they're worth hundreds of millions of dollars, as a valuation, and there's nothing to show for it. That was very similar to what we saw at the dot com bubble. Now, back at the dot com bubble, they didn't have really um, they didn't really have a lot of the bigger players like we do now out there. There were some, obviously, like back then Intel was very good, Dell was good, there were some very big players back there, but not like we see today. And there were a lot more companies that were out there that were just had a dot com at the end of their name and had nothing to show for it. So it's not as exaggerated as before. So I think we have a little bit of an AI bubble, but nothing like we saw for the dot com bubble. And that little bit of a pop, though, could be enough to send the market down. So we'll just kind of see what happens there. Um, Dad, I suggest you do your own work to see how the economy is going rather than listen to things. I have things are going good now. So, going out to do my own work, this is what I have recognized in my job. And I work in construction retail. For you guys who don't know, from the large contract, like government contracts and things like that, large work doing very, very well. Residential work, nothing. All of our customers that do residential work have no work going on whatsoever. That means the consumer right now has no money to spend. The consumer is struggling to do anything. I know, obviously, when it comes to my groceries and things like that, prices are holding steady. Some have gone up a little bit, but it's not terrible. But it's holding steady. But just looking at it from my own perspective, and I love that too, because so many times we go out there, we listen to what the media tells us, listen to social media, and we're listening to what other people tell us instead of just using our own eyes, going out there and seeing what's going on. And that's what I've been seeing. And so, from a consumer standpoint, from my perspective, consumers are hurting because they don't have that money to spend. And in turn, our contractors are hurting because they're not having that money coming in. So some of them are closing up shop. Some of them are just, they're scrambling to go out there. I have more and more people calling right now asking for what jobs are being bid on right now because they need to bid on them because they need work. And there's not as much work out there in the construction field as there was before. Now, we saw a very stark drop after August. Typically, August for us is a little bit slower just because a lot of these guys are taking vacations right before school starts up. And so it was a little bit slower, but then September hits, typically it picks back up again. It actually fell off further in September. Now, when October hit, we basically saw a complete reversal and we were through the roof. We actually had higher revenues in October than we had in August, and that's rare. October is usually pretty good, but not like that good. But again, most of that money was coming from the larger jobs, not from the residential jobs. So that's what I'm seeing as far as the construction field goes. And you guys can mention in the comments, what you guys have seen from your own perspective. But from where I'm at, from where I'm standing, that is what I am seeing, what is actually playing out, at least here in Connecticut. I'm very curious to see how XAI develops. I definitely think this is the calm before the AI storm. I fully agree. And again, when it comes to AI, very much like the internet, once people figure out how to really utilize the internet to generate revenue, once they figured that out, that's when it really took off. Now we're at a point where we're getting through that point with AI. And with AI, it's going to be even better because AI can think better than a human eventually. They're getting to that point where AI is going to be able to speed it. So the speed of knowledge is going to be much faster this time around. So while it took the internet, basically 10 years to kind of figure it out and get through that, AI could be 5 as long as we get AI growing, at the rate that we're going at now, and AI really starts to do its own thinking. We could speed up that process, could be 5 years. So I think AI could be massive. But the problem with that then is you hit that point where AI growing is going to end up eliminating a lot of jobs. Obviously, it's not going to be manual labor jobs yet. Those will come down the road. But when it comes to developer jobs, when it comes to engineering jobs, when it comes to, a lot of the just, editing jobs, things like this, like people who do editing for like videos like this, people who do a lot of the thumbnail stuff, a bunch of the stuff like on Fiverr, and people who work on there as, independent contractors, a lot of that stuff can end up going to AI, and people going through AI to use that. Let's say, and they're not charging a lot. So let's say an independent contractor on Fiverr is charging you $5 for thumbnails. You might be able to get it for $1 from AI, and you might be able to get, 100 different versions of it for $1 versus you get 5 versions for $5. So, you could be cutting down significantly on costs there, but then in turn, that means that a lot of people end up losing their jobs from AI. So I think we'll get to a point where we may need universal basic income coming in or something like that. But there's going to be, I think, one of those a lull where we're going to have AI taking a lot of jobs and nowhere for a lot of these people to go, and no income coming in for them. And so there could be some uncertainty in that area. Yeah, AI right now. Yeah, like Tyler learning to walk, sort of like Optimus walking around. Let me see. What do you think of Round Hill weekly dividend QDTE, XDTE? So, ironically, next week I'm finalizing times and dates with Darth Dividend, and it might end up being next Wednesday evening, but I'll keep you guys posted on the date. We're going to discuss just that because I want to add one more ultra yield dividend to my portfolio right now. And if not now, I want to add it for when I get to level 2 in my portfolio, which would be probably beginning of the year. And XDTE is one of the ones on my list for that. So I have a couple of other plays that I'm not sure about. WDTE, I've got QQQY, and those are playing the puts. But obviously, with the market going up, they haven't been doing well. So I'm holding them just because I am anticipating a pullback, which may end up helping them perform better. I'm just kind of waiting that one out. So I may flip those out, but I want to ask Darth about this because he has more experience in a lot of the ultra yields. I used to have the yield max stuff I'm familiar with, but he's a lot more familiar with all the other ones. So pay attention to next week because there's a lot of questions I have for him. So if you guys are interested as well, definitely stay tuned for when I'm going to have him on here, and you guys can fire all your questions away at him. because that's a lot of the stuff that I want to find out as well. And the weeklies are nice because, again, for me and my portfolio and how it's set up, the more cash flow I have coming in more regularly means that I can invest more regularly and add. And I'm more about adding than selling. So if I sell something out, it's because I'm trying to consolidate, and that's all I'm doing. But I really don't want to sell. I'm doing it for the consolidation purposes, but the more income I can have coming in more regularly, so weeklies are very intriguing to me. But I also know that weeklies are going to be a lot more high risk, and they're going to have a lot higher chance of NAV depletion. And I don't want that as well. So again, that's why I'm going to have him on. It's awesome. I currently have QDTE in my portfolio and love it so far. Yeah, that's one of the ones, QDTE. Awesome. Seen amazing things with that. Just the chart on that since its inception has been amazing. So, and it seems like it's one of the better, they run it in a much better way than others out there to mitigate a lot of that NAV erosion. So it seems very intriguing to me, which is why for me waiting till the first of the year, if it's going to continue doing this and prove that it is, a play like that, because one of the issues that I had with a lot of these ultra yield plays is it seemed like in most cases, the hot thing is what got the money. So you wouldn't see the NAV erosion because so many new investors were coming in. So it kind of masked any NAV erosion that could be going on. But then as soon as the next hot thing came out, that money would shift into the next hot thing, thereby not only exposing the NAV erosion, but magnifying it because people were leaving and the NAV erosion showed up. So I just want to make sure that this isn't going to fall into that category where it's the next, another hot thing comes out and people start dumping their money out of this one, causing that NAV erosion. And it's cool that, hey, maybe it still shows a 60% yield on it. That's great. But a 60% yield doesn't mean anything if the overall equity value continues to drop down, because 60% on $20 is different than 60% on $10, and you're just losing your money. Now, I know that this one here, I think it's QDTE, has a yield of about 20%. And so 20% to me seems a lot more sustainable, and I'm more comfortable with that. So I don't mind, like I've got SVOL, they're doing about a 16 to 18%. I love that one, but obviously with volatility potentially going up, they've slowly been dropping their dividend payouts. So not a lot, enough for me to keep holding on to it, but I just paying attention to it. So if they can hold on to that 20% with QDTE and not show any of the NAV erosion, that'll be definitely one of that's the top one on my list right now to jump into. Yeah, NAV erosion, NAV has been looking amazing so far. And again, I think that's great. And again, with the 20%, I think they can hold it. I'm just, again, I'm not at the point to add to my portfolio yet with it. So if the next couple of months it holds this position, I will jump in the beginning of the year. Oh man. All right. I think I'm gonna jump off, guys. My throat is starting to get a little raspy here. But thank you for hopping on tonight. And I apologize for the inconsistency this week, but I'm feeling better. I'm supposed to go on a hike tomorrow. Hopefully some fresh air will kind of clear my head up and I'll be good for next week. And the next week we've got a lot of exciting stuff. So next week we've got, obviously, like I said, the election that's going on Tuesday. Who knows if we're going to have official results the next day? Obviously, after the last election, could be wild. Then we've got the FOMC starting the day after the election, and then we'll get the rate cuts coming out on Thursday for next week. And then Friday is my birthday. So next week, again, I'll let you guys know what's going on with Darth and the time we're going to do next week for his live stream. I may do a separate live stream again the next night. I'll keep you guys posted next week, but the schedule for this week will be Wednesday, the Sunday. I should be, hopefully, if I have time, I'll do 2 videos, my October portfolio wrap up, and I'll do what to expect for the week ahead. Monday is going to be the dividend increases from this current week that we're in. And then Tesla Tuesday, I will actually start doing a Tesla Tuesday on election night. So got a lot to discuss on election night, but I'll keep you guys posted as to what's going on. Otherwise, thank you guys so much. I appreciate you guys being here. Have a great one.